So let's begin the last chapter in CA Inter Audit in our order of discussion, that is risk assessment and internal control. So in this chapter, we are technically going to learn 3 standards. That is what the institute book also says. So 315 standard, 330 and 320. And if you recollect, from the beginning, if you observe, there are some 2 standards that are there in completion and review chapter, I guess. 2 standards I kept pending. One is 265 and 450 were still pending as of now. These 2 standards we need to discuss only after completing this chapter. Getting it? And if you look at the weightage, I mean, if you look at the breakup of this chapter, this chapter we are typically discussing risk assessment and internal control, and another standard typically that we are discussing is 330. Another standard that we are discussing is 320, which is actually talking about materiality. And if you look at the total number of questions that we have in this chapter are 50 questions. In our material itself, the number of pages are close to 70 pages. Only theory part I'm telling you. Only the theory part is 70 pages. We are having 50 questions. Apart from the 330 standard is there. In 330 standard, we have not discussed it as a question and answer. We directly discussed it in the standard format. In the auditing standard format only we discussed. Suppose if we split them into questions, another 10 questions might come. Which means technically in this chapter we are discussing 60 questions, 60 questions. And the weightage of this chapter, you see this is the weightage skill wise, section wise weightage document. You see risk assessment chapter weightage is 8 to 12%. So minimum 9 marks, on 120 marks you apply, minimum 9, maximum 14. Okay, 120 multiplied by 12%, 14. This is the weightage. So worst scenario, not more than 15 marks for approximately 60 questions content. You know how much time this chapter takes? Maybe for my explanation, it might take 8 to 10 hours, worst scenario. And your preparation, you may have to spend another 15 hours extra, which is equal to 25 hours you have to spend on this chapter minimum. Only when you're spending 25 hours minimum to 30 hours, you can become master in this chapter. Otherwise, it's not possible at all. The main reason why I kept this under second category chapter, the main reason is because of the vastness of the content. The content is so vast, so voluminous. So I always recommend students to ignore this chapter, even not in the only new scheme, even in the previous scheme also. In this chapter, I'll tell you one more specialty. In our previously, we have a chapter called automated environment, which is now removed and added in this chapter. So automated environment is actually a separate chapter. 330, this is actually discussed once upon a time as a part of audit evidence topic. Now there it is removed and added in this chapter. Getting it? And materiality is something separately to be discussed, but that is also added as part of this chapter. So technically here some 8 questions and this is some 10 questions here. This is some 7 or 8. Approximately 30 questions content. Earlier was not as part of this chapter, but now added as part of this chapter. And in spite of all this, still the weightage is maximum 14 marks. That's the maximum weightage. Alternatively, what you can do, if you don't want to read this chapter, if you don't want to listen to this chapter, alternatively, the amount of 25-30 hours of time, which is nothing but what you can do, within 30 hours, you can revise solidly the entire subject once again. Whatever the last 10 chapters that we have studied, all those 10 chapters, you can give a proper revision once again with the same amount of time and gain perfection. In exam, I always recommend students to attempt 80 marks perfectly, 80 to 90 marks of the paper. Please try to attempt the best perfectly. I'm telling you, you will score 60 plus. It depends upon the level of perfection with which you are writing. Getting it? I know personally some students who attempted for 70 and scored 60 plus. And I know some students who attempted for 110 marks and still scored 25 marks. It's not about how many marks you attempt. It's about the perfection. Today, the paper evaluation is completely they don't have the flexibility. They just have to look at the suggested answer and then look at your answer. If both are matching, conceptually complete meaning is properly conveyed. Suppose they in suggested answer some 5 points, but there the same 5 points you wrote, in a different way, but these 5 points and these 5 points are conveying the same, then only you'll get a mark. If you write your own 5 points which are not matching with the suggested answer 5 points, you will not get a single mark at all. So this is the kind of valuation. So I'm giving this disclaimer at the beginning itself so that you prepare your mind, You know what I tell you as a safe side? Before you listen to this, first finish remaining all 10 chapters. Do thorough revision of all the 10 chapters. And if you're confident, you are having so much of free time now, then continue watching this and revise this. Otherwise, don't even touch this chapter. This is what my personal recommendation to you. Now in this topic, totally the topics are broadly divided into 7 categories if you observe. You know, this one, question number 1 to question number 6 and 16 and 17, roughly speaking 8 questions. They are talking about risk assessment topic. And some 20 questions we are discussing purely about internal control, and some 8 questions or 9 questions about automated environment, some 8 questions about materiality topic, and some 2 questions on IFCO4. It's nothing but internal financial controls over financial reporting. Getting it? IFCO4 we call it as. So that 2 questions, and documentation and reporting related to this particular topics, risk related topic, all that. 2 questions we have. And one exclusive standard we are discussing, that is SA 330. And after we finish this topic, then we need to discuss 2 more standards, 265 and 450. With that, the entire syllabus will be completed. Getting it? Fine. So I think I gave you proper introduction to it. Fine, let's begin this chapter. So risk assessment and internal control. So the first thing, first of all, what is this chapter is all about? You know, once again, I'm recollecting at the in analytical procedures topic introduction and documentation topic introduction also, I spoke about this. Whatever we do in audit is called as audit procedure. See, tell me, what is the objective of auditor? The objective of auditor is to obtain reasonable assurance whether the financial statements are free from material misstatements or not. We want to get reasonable assurance and ensure that the financial statements are prepared as per applicable financial reporting framework. And I told you, we are discussing this audit completely from the point of view of general purpose framework. Like we are doing audit of financial statements prepared using general purpose framework. So that financial statements audit context only we discussed this entire subject. Now, so we want to get reasonable assurance. How do we get reasonable assurance? You need to perform the audit. You need to apply examination procedure, verification procedure. Why we need to do audit procedure, verification procedure, examination procedure? To get evidence. What evidence I want? I want evidence that whatever information shown in the balance sheet, whatever information shown in the P&L, it is true and fair. So it is true and fair. So I want proof for the entire that financial statements information. For getting those evidences, you need to work, right? You need to ask people, you need to verify the documents, you need to calculate something, you need to do analytical procedure, you need to perform various procedures to get the evidence. And all those procedures are simply called as what? Audit procedures. And conceptually, these procedures are broadly classified into 2 types. Risk assessment procedure, and here I'm changing the name. Response to assessed risk. Response to assessed risk. One is risk assessment procedure. So in risk assessment procedure, what we get? We identify the risk. What we do? We identify the risk. Not only identifying, we are also assessing the risk. Assessing the risk means, is it a high risk or is it a medium risk or is it a low risk? So first we identify, risk assessment procedure means there is a standard 315. The standard 315 says identifying and assessing risk of material misstatement through understanding the entity and its environment. A company appointed me as an auditor, which is doing a textile manufacturing company appointed me as an auditor. It's a very big textile company where the turnover is more than 1,000 crore. So that company called me to do audit, and the company is located somewhere in South Tamil Nadu. Getting it? It's a very famous for textile industry. So they called me for conducting audit. Okay, fine. So they invited me. I did all the procedures, preliminary engagement activities I did. Okay, I verified integrity of the management. I entered into terms of engagement. I checked with relevant ethical requirements, all that, and I accepted the appointment ultimately. Then all the preliminary engagement activities I completed. Then now I started risk assessment. Like now I will understand. So what exactly this company is doing, which branch of textiles that they are manufacturing, which branch of textiles they are manufacturing, what are they having exports, so what are the varieties and what is their market share, so who are their customers, who are their suppliers, all that I am verifying. So all that I am verifying. So I'm just trying to understand that. Fine, I understood what company exactly is doing all that. Then I went to their factories. I went to their godowns. They have warehouses. They have factories. They have a dyeing, print, coloring, dyeing departments and all they have. So they manufacture textiles and they sell plain cloths as well as ready-made garments, designer garments, all that also they'll be selling. So I'm just trying to analyze what business they are doing. What am I doing here? I am trying to understand the entity and its environment. Environment means what? Fine. Let me let me go to the warehouse once, or let me visit factory. So first I went to warehouse once. I went the day one of the audit. The accountant came, introduced me who are all the finance department people, all that. He introduced to me. Some budgeting team is there, marketing team is there, all that, and finance team, marketing team, sales team. He is just introducing everybody to me. Okay, because I'm new to this company, he's introducing everybody to me. Fine. So then he took me to warehouse. So there's a very big warehouse, approximately the warehouse itself is of, I can say 1 lakh square feet. So 1 lakh square feet size of warehouse, so big. Getting it? So when you go inside the warehouse and look at the top, it's almost like some 5 to 6 ceilings height, almost some 60 feet, 70 feet height. Such a bulk warehouse. So many racks were there. Getting it? And in all those racks, so many goods were there, tags were there, numbering is there. Getting it? And when I noticed, specifically, there is only one entrance for the warehouse. Getting it? Only one entrance is there. And there is another exit is there. In this, only entering is possible. And if you want to go exit, there is exit, another side is there. Only these two. There is no other way somebody can enter inside this warehouse. And I noticed CCTV cameras were there, and they are using high definition CCTV cameras. All that continuous monitoring is there. Everywhere, wherever possibility is there, they added CCTV cameras, all that. And at the entrance, there is a security guard for the warehouse, and the exit also security guard is there. Getting it? And inside the warehouse, there are some computer systems were there. Okay, they are for capturing the inventory. They're all for recording the inventory. Inventory records are maintained electronically. I'm just looking, so how they're maintaining all that. So I'm not going in depth again here. I'm just briefly looking into, okay, when I see this kind of environment, I understood that the controls in the warehouse is proper. I felt the controls in the warehouse is proper. Fine. Some 1 hour, some half an hour I spent there. I tried to understand something. Then immediately he took me to the factory, which is also in the same campus. That's a very big, approximately some 50 acres textile, park kind of. Getting it? So then he took me to the factory. So we went to buy a small, like a mini van kind of is there. So we went by a van to the factory. And then the moment we enter into the factory, it's so vast. So many machineries were there. So many workers are working. And I noticed workers are wearing different color uniforms. Workers are wearing different colors of uniforms. So immediately I got it out. Like, what is this is about? I think this similar example I have used previously also, but this is one of the best example so that you can understand risk assessment chapter very realistically. Different colors of uniforms they are wearing. Some are wearing green color coat. Actually, they come in casual dress only. The company will just provide blazer. That's it. Getting it? So blazers. So many are wearing blazers. Some are wearing red color blazers. Some are wearing green color blazers. Some are wearing yellow color. Some are wearing orange. So different color blazers there. Why there is why there is such a kind of color coding? And even they're having tags in software companies. You find tags like ID cards. They'll wear the ID card tag. It will have multiple colors: so blue color tag, orange color tag, yellow color tag, white color tag. This signifies the position. Those who are wearing white color means probably the top level of management. Those who are wearing blue color means probably second level of management. Those who are wearing orange means entry freshers. So such a kind of color coding is there. Getting it? The color of the uniform or the color of the ID card tag. So that signifies which level of management he is. Getting it? So some different blazers were there. Each worker is wearing a different color blazer. So when I ask, sir, those who are wearing blue color blazers, sir, they're all are permanent employees, sir. We trained them, we recruited, we trained them, we are giving salary, and they're all going to stay in our staff quarters and all. So they're all permanent employees. Then what about orange color? These laborers, sir, these are all contract laborers. So whenever we want, some laborers, in a month, depending upon our project, depending upon the orders, so for a particular month, we will take laborers through as manpower supply of manpower companies there. There is a manpower supply companies there. We request them, they will send some 100 staff whenever we request, and they'll be there for 1 month. So they are not our employees. They're actually belonging to some contract service provider. Getting it? So on a contract employees. Okay, then what about yellow color uniform? So they are all freshly recruited, newly recruited. They are all under training right now. Oh, fine. Then what about some other color? Let us say some violet color or any purple something. So what about that? So they are all casual laborers. Means they are not our employees. They are not even contract employees. They are daily workers. They are daily laborers. Daily laborers means what? What do you mean by that? Now, we don't know exactly every day how many additional workers are required. So they just come for clerical works. The clerical works means stitching the buttons, finishing related works, cutting the unnecessary threads and all. So those kinds of clerical works they do. But once the garment is finished, the packing works and all that these daily laborers will do. How many daily laborers every day will come? So that depends upon day to day. Management is replying me, whatever query I'm asking, that depends upon day to day. Okay, fine. So how are you paying the wages to them? The management replied me, sir, we pay by cash. Okay, paying by cash. How much wage per day? Sir, again, if inside those daily laborers, sir, we have again 2 to 3 categories. 2 categories we have. Skilled one, semi-skilled one. Okay, skilled one, how much you are paying? 1,200 per day, sir, wage. For semi-skilled one, 800 rupees we are paying. Okay, who will assess skilled and semi-skilled? Sir, I am the production manager. I will assess this. Okay, who are paying them? I am only paying them. How are you paying them? I am collecting cash from the head office and then paying them. Getting it? Now here there is a risk. Since production manager is the one who is assessing skilled and semi-skilled, and he is the only one who is actually paying the salary in cash, getting the point. Now there is no other third parties involved. Segregation of duty is not there here. Duty segregation is not there. Whether he is a skilled or semi-skilled, somebody should assess. And another person should pay them the wage directly. Moreover, you should not pay by cash. Today, in the modern, this thing, UPI, all that came very popular, and many of them, all these casual laborers are using UPI methods also. Then why, in spite they are using UPI, why are you paying by cash? Something is wrong. It's a risk. Now you see, like this, I do evaluate warehouse, I do evaluate the factory, I do evaluate the books of accounts, I do evaluate the company, I do evaluate how company is running, I will see how management is functioning, who are all the executive directors, who are all non-executive, how frequent meetings are happening. So entire this entity and environment, I try to understand to identify risk factors. Now just this example, if you see, in this company, textiles, one of the major costs is of course purchases. Purchase of raw material is one major expenditure. Second major expenditure for this company is employee benefit expenses. In this employee benefit expenses, 20% of the total expenditure of the company is in the form of daily laborers, casual laborer related to wages, and that is paid in cash. Remember the volume, remember the materiality of this transaction, so big. I found a risk here. There is a possibility that the production manager can manipulate wages and misappropriate cash of the company, misappropriation of assets. It's a fraud risk factor. What is a fraud risk factor? We have a separate standard called SA 240 at CA final. We don't have it in CA inter. Now, whatever I did is called as, risk assessment procedure. What am I doing? I am identifying the risk. How am I identifying? By understanding the entity, by understanding how the factory works, how the warehouse works, and its environment. Now, I identified risk, right? Now, which risk I identified? In our example, wages paid in cash, some manipulation is there. Okay, now SS, what is the scale of risk? This wages is out of total employee cost, 20% cost is daily laborers wage only. And this is approximately 5% of the turnover, which is high risk. It's a very material. It's a high risk item. Getting it? It's a high risk item. So what I will do, what I will respond, what will I do for this response? When I'm developing my audit plan, after I complete this risk assessment, I will establish strategy, right? While developing audit plan, I will respond to this risk in a way that I will perform substantive analytical procedure, and I will also perform test of details, and I will also perform test of controls. All the three I will perform. This is my response. Response to assessed risk is nothing but further audit procedure. Response to assessed risk. This is what 330 standard says. 330 standard heading is what? Response to assessed risk. That's it. So what is the response? I perform further audit procedures. What will you perform in further audit procedures? I perform compliance procedure. I perform substantive procedure. In compliance procedure, I will do test of controls. To daily laborers, they are paying by cash, right? What are the controls they implemented so that only those who come and work in the factory, cash is paid? What are the controls are there to evaluate skilled how many, unskilled how many? What controls you have? What policies you have? What parameters you have? Substantive. Then I will take test of details. I will take some 10 days related wage payments, and I will see the names, workers, and I will try to talk to them directly. Test of details and analytical procedure. And I will see analytical procedure. I will see every day how many daily wage workers are coming. One day some 49 were there. Another day some 74 were there. Another day 250 were there. Generally 40, 50, 60 range only daily laborers are coming. But suddenly for few days 250, 300 laborers are there. Why suddenly 250, 300 laborers are there? It's an unusual thing, right? Analytical. So when I inquire, no sir, because that week, no, we have a big order from some foreign client, sir. So we need to supply them. So since it's a very big order, we want. And during that 1 week, sir, we worked double shift also. Okay, show me production records, whether during that week production happened double quantity. I will check out. Cross verify it, corroborate it. Management gave a response, no, corroborated. See whether raw materials or, whether what is the quantum of raw material consumed during that 1 week, how much finished goods produced during that 1 week. I will cross check whatever management said to me with this. Okay, fine. So these many laborers were additionally recruited in that particular period. Of course, production happened very heavily. Subsequently, sale also happened. See sales records. In that month, sales are suddenly high compared to previous general months. So corroborate the evidences, multiple sources of evidences, corroborate. If at all they are inconsistent, something is wrong, do investigation. So this is what risk assessment procedure and further audit procedure. This is what audit procedure broadly means. So response to assessed risk is 330. That is what standard 330. Response. How do you respond to the risk? I respond by planning the audit, performing the audit. Simple. I perform the audit, compliance and substantive. Inside the test of details, where I will test transaction, I will test balances. Then I will also do analytical procedures to analyze, to get an overall conclusion, to get an overall clarity, whether as a whole, is there anything that I missed? To get that complete satisfaction, analytical also I will perform. Able to understand. Suppose in go down, when I went in go down, right? In go down also I identified some risks, but the risk is very low risk. There I decided to do only analytical procedure. That's enough. So when I identify any low risk, my response is what? Just to perform analytical procedure. That's enough. If in my analytical procedure, what I expected and what is there in the record, if both are matching, fine. I will not go much in depth again because the risk is very low. Remember, in analytical procedure chapter also, we understood one question. What is can auditor use analytical, substantive analytical as a sole audit procedure? You can use sole audit as a sole or along with the in combination with rest of details. It depends upon suitability of analytical, reliability of the data, expectations with which accuracy of expectation development. Whether can you accept difference without any further investigation? We have seen this. Some question number 7 or question number 6 in analytical procedure topic. This is what risk assessment and response to risk assessment. Response to the assessed risk. Clear, all of you? Fine. Now, just a minute. That's it. So that's about risk assessment. Now, why we need to do this risk assessment? The objective why we need to do risk assessment is to reduce the audit risk. To reduce the audit risk to an acceptable low level. To an acceptable low level. You need not write, just look at it enough. Why are we doing this risk assessment? Whatever audit evidence, whatever audit procedure, all that we are doing. Why are we doing all this? We wanted to reduce audit risk to an acceptable low level. Now, okay, fine. We do risk assessment, we do gather evidences, we do further audit process. All that audit process we are doing in order to reduce the audit risk. What is an audit risk? You see here, meaning of the audit risk. The risk of expressing an inappropriate opinion when the financial statements are materially misstated. is treated as audit risk. Is treated as what? Is termed as audit risk. Look at the definition carefully. Risk of expressing inappropriate opinion when the financial statements are materially misstated. Tell me, when the financial statements are materially misstated, what opinion we should give? Modified, which may be qualified or which may be adverse. Materially misstated, remember, they are misstated materially. So in such a case, either qualified or adverse. It's not about disclaimer. Disclaimer we give when we are unable to do audit, when we are unable to gather the evidence, we give disclaimer. But when financials are materially misstated, if I know all the mistakes, I will definitely give which opinion, either qualified or adverse. But I am expressing an inappropriate opinion in that situation. When financials are materially misstated, what is appropriate opinion? Modified. But instead of giving modified opinion inappropriately, improperly, which opinion I am giving? What if I give unqualified opinion? What if I give unmodified opinion? This is audit risk. Risk of giving an unmodified opinion. What is the consequence? Tell me. What happens if auditor gives an inappropriate opinion? Okay, financials are materially misstated. You gave everything is true and fair. In such a case, reputation of auditor will be damaged. Not only reputation, he could also invite regulatory action from professional body and could face legal actions. Yes or no? Because when everything is wrong, you said that everything is true and fair, when in fact the financials are materially misstated, you gave an unqualified opinion. People think that you colluded with the company and defrauded people. Yes or no? Now tell me, to avoid these kind of unpleasant consequences, what auditor has to do? Be careful. Plan the audit, perform the audit in such a way that audit risk is reduced to an acceptably low level. Plan the audit and perform the audit and reduce the risk to a low level. Getting it? So plan the audit in such a way that you reduce the risk to an acceptably low level. So now again you see here, suppose no, if at all financial statements are actually free from material mistakes, means they are absolutely true and fair. But remember sampling risk, risk of under-reliance, risk of inappropriate rejection. Remember these two. Risk of inappropriate acceptance, risk of inappropriate rejection. In sampling, I covered these two. Getting it? Suppose the financial statements are actually true and fair, but you selected sample, right? In that sample, some 3 or 4 material mistakes you found. But you concluded inappropriately. Since in the sample only these many mistakes are there, obviously, since in sample itself these many mistakes are there, obviously in the financials also so many mistakes will be there. You concluded like that and gave an adverse opinion. You gave an adverse opinion, but actually financials are true and fair. You gave an adverse opinion in spite the financial statements are not, in spite that true and fair. Now tell me, okay, you gave adverse opinion. People also looked at it and they also hesitant to take any economic decision. Some of them, even though it is risky, they took decisions and bought the shares of the company. All that is fine. Tomorrow, suddenly a big fraud has noticed in the company, which you also did not identify. Big fraud was detected suddenly. Now tell me, somebody came and questioning you, hey, what are you doing? What you will reply very confidently, hello, I already said everything is wrong. If you invested in spite of it, what will I do? Can you question them? Can you reply them with a bold answer or not? When you give an adverse opinion already. When you give an adverse opinion, the risk is zero. It is not a risk for us. Because when we already said everything is wrong, what risk will be there? Maximum the risk is I will lose the client. Next year he will not come to me. That's the only risk I have. But reputationally, do I have any risk in these kinds of cases? Why I gave adverse opinion? I'm giving reasons also. People are accepting the reason. When basis for adverse opinion section, I give clearly the reason. Able to understand. So generally the risk is high when in a place where adverse you have to give, you give unqualified opinion. Their risk is high. If at all financials are wrong and you said everything is right, people think you are colluded. When financials are right, in spite you said they are wrong, people think you are very tough and adamant. That's it. They will not think you are a fraud. Yes or no? So that's the audit risk. That's why you see they beautifully crafted the definition. In other words, expression of unmodified opinion in a situation where modified opinion is suitable, and that is called audit risk. If at all Wherever unmodified opinion is suitable, you gave a modified opinion. That is not an audit risk. Remember, we have a standard 200. That is nothing but nature, objective, scope of audit chapter is there na inside that. The auditor shall obtain sufficient appropriate evidence to reduce audit risk to an acceptably low level and thereby enable the auditor to draw conclusions on which to base the opinion. For example, profits of the company were increased artificially by fake revenue of sizable amounts in the financial statements. In such a case, financial statements are materially misstated. The probability that auditor in such a case expressing wrong opinion is referred as audit risk. When the financials are completely misstated, the possibility that you may give unmodified opinion, right? That risk is called audit risk. It is a possibility that auditor is expressing unmodified opinion even when the financial statements are materially misstated. What is not an audit risk? Audit risk does not include you are giving modified opinion when the financials are not misstated. The financials are free from material mistake. They are true and fair, but you gave modified opinion. That is not an audit risk. Further, remember, audit risk is a technical term related to auditing, audit work that we are doing, engagement related. That is actually called as engagement risk. Audit risk. It's not auditor's risk. It is not. It does not refer to business risk like loss from pending litigations, adverse publicity, loss of client, loss of reputation. That is not audit risk. These are all consequences of audit risk, but not audit risk. Audit risk means in the financials, something is wrong, but I said everything is right. That's audit risk. Suppose a client, no, I am losing my clients. That's a business risk. That's not audit risk. Able to understand. Until now, it is completed. Next, what are the components of audit risk? Then now, how audit risk arises? Why audit risk arises? Before that, just a minute. Yes. So, components of audit risk. So, why audit risk arises? Fine. What is risk assessment? We understood. What are we learning in this chapter? We understood. And why we need to do risk assessment? Because we want to reduce the audit risk. What is audit risk? We understood. Why audit risk arises? Like why audit risk comes, first of all, comes into the place. By this time, you might have understood why audit risk arises. One of the reasons why audit risk arises is sampling risk. One of the risk is sampling risk. Other risks are called as non-sampling risk. Some risk is there. Why we are giving inappropriate opinion when the financials are materially misstated? There are many reasons. One reason is sampling risk. It's because of the way we are selecting sample. Sometimes the sample which we selected may not identify all the material misstatements in the financial statements. In such a case, you accept the entire financial statements are true and fair when in fact they are not true and fair. Getting it? You accept internal controls are working super efficient when in fact they are not. That's called risk of over reliance, sampling risk. Remember, sampling risk topic. So sampling risk is one of the reasons. Fine. Technically, why audit risk arises? They gave an equation. The audit risk, it arises because of two things. One, there is a risk of material misstatement. What is risk of material misstatement? It is a risk that financial statements containing material misstatements. It is a risk that financial statements are containing material misstatements and you are not detecting them. You are not identifying it in audit. Detection risk means not able to detect. That is the reason. Obviously, every company financial statements will contain mistakes for sure. If you identify them, risk is reduced. Now, how? If you identify, you will not give unqualified opinion. You will give a qualified opinion or adverse opinion. Risk is reduced. The problem is you are not identifying. You are unable to identify. Why you are unable to identify? Sampling risk. Because we are doing audit on a sample basis. Remember, audit suffers from certain inherent limitations. The way we do audit, nature of financial reporting, there are so many inherent limitations were there where because of all these inherent limitations, I cannot identify all the misstatements in the financial statements. Now, when you cannot identify all the misstatements in the financial statements, obviously you feel that when you don't identify, see, I did audit for 30-40 days. I tried my level best to identify mistakes, but I didn't identify. I couldn't identify. Okay, since I could not identify material misstatements, what opinion I'll give? Unqualified opinion. We generally give unqualified opinion because we don't have an option. We generally give unqualified opinion because that's the only possibility we have. Suppose you want to give qualified opinion or you want to give adverse opinion. In the basis for qualified opinion, basis for adverse opinion, you should clearly mention why you gave qualified opinion. Adverse opinion means you should clearly tell what mistake you found. Suppose if at all I did not find any mistake, basis for qualified, basis for adverse, I cannot give any reason. If I cannot give any reason, I cannot give qualified opinion, adverse opinion. If you cannot give an adverse opinion or qualified opinion, which opinion you will be giving? Ultimately, unqualified. Most of the company's auditors are giving unqualified opinion just because they could not discover material misstatements that are there in the financial statements. The fact that they are not discovering, not detecting the material, and that's called detection risk. If financial statements are having material misstatement, there is a risk of material. Financials are materially misstated and you are not detecting it. And that's why you are giving inappropriate opinion that everything is true and fair. Able to understand. So what is risk of MMS? And you know what? Risk of material misstatement is again divided into two types. Components of risk of material misstatements. Again, risk of, why first of all financial statements will have a material misstatement? Inherent risk, and another one is called as control risk. Why financial statements? Why there is a risk of MMS? It's because inherent risk. Obviously there is a risk in every business process that we are doing. When we are selling, suppose DMart, through a sales executive at the billing counter, he is selling. There's a possibility that he can collect cash from the customer but won't give the bill. And the security guard will allow the customer to exit without even a bill. Is it a risk or not? So he can happily take the cash and keep in the pocket. There is a risk or not? If security guard and the billing person, if they become close, yes or no, they can simply, sir, customer, no, whoever pays me cash, I will take the cash. I will send the trolley to move to the exit gate. You also approve it. We both will share 50-50%. Is it a risk or not in the business? Risk of fraud. Now, that's called inherent risk. In every business process, risk is there. Somehow, organization will suffer from some sort of the loss. Some risk will be there. Now, tell me, in this particular situation, the risk is of misappropriation of asset. What happens because of this? So many goods were sold to customer without collecting. So many goods were sold to customer and collected money, but the sale is not recognized in books of accounts. If sale is not recognized in books of accounts, inventory balance is not updated. Inventory is overstating. Balance sheet is overstating. Possibility there or not? Balance sheet is misleading or not? Now tell me, okay, this risk is there. What company did? That's why company implemented control. What control? Every day, whenever all the staff comes, whatever their personal cash, mobile, everything, they should they should take off and keep it in a locker, where they will give you a locker key. And there will be a supervisor for the locker key. So whenever you open the locker, so whatever the items you are keeping, there will be a register. What items you have, how much cash you brought when you are entering inside this office, when you are entering into the duty, and when you are exiting from the duty, that cash amount only should be there in your pocket. Daily that kind of checking is there. 2. Security gate, above him, exactly above him, CCTV camera is placed. Whether each and every bill is he screening and then sending or not, there is a mechanism. 3. Every day stock taking will happen. Once in a week in DMart and all, stock taking will happen of that particular segment. They have to report stock balances every day. Perpetual inventory system they are maintaining. If at all, some 3-4 days something happened like this, 5th day it will be discovered. Such a kind of controls are implemented. Now tell me, there is a risk and control is implemented by the company to mitigate the risk. Okay, control is implemented, everything is fine. What if a CCTV camera power supply went off? Getting the point? The power supply to the CCTV camera suddenly was disconnected. Somebody disconnected intentionally. What is it? So there is a possibility. Okay, there is a risk. The company has implemented a control. What if the control fails to perform? What if the control fails to function? The control failure is called as control risk. It is the control is unable to detect, unable to prevent. See, control means again the concept of internal control. What is an internal control? First of all, right now I told, right? As soon as a billing person takes up the duty, first before he is switching on the system, he should, whatever cash, whatever articles, phone, everything, he should take it out and then keep it in the locker. Common locker will be there for entire staff. In that locker, they need to keep it. So that's a control. That's a policy of the company. Controls are nothing but policies and procedures. We have seen in quality control standard. Control means what? Quality control. Control means what? Some policy and procedure. Some rule they need to follow. Some procedure they need to follow every day. Standard operating practices. CCTV camera is a control. Internal controls we call it as. What if that internal control is not proper? Why controls are there? By the way, the controls are there to prevent frauds, to prevent errors. Controls are there to detect. Controls are there to correct. So controls are three types: preventive, detective, corrective. We will discuss more about controls related topic in controls discussion once we start question number 18 onwards. So right now this knowledge is enough. So risk of material misstatement consists of two components, namely inherent risk and control risk. Both are entities risks. Yes or no? Are they audit? Is this risk created by auditor, controlled by auditor? No, these both are in a business. In any business, you see some inherent risk is there, some control risk is there, and they exist. These risks will exist independently of the audit. So whether we do audit or not, the risk will be there. CCTV camera, CCTV and all, if auditor is doing audit of financials, do you think CCTV camera works properly? There is no link, right? But whereas detection risk is in whose control? Auditor's control. So no, detection risk means what? How I can identify material misstatements. Whether can I identify material misstatements? My ability to identify material misstatements is called as a detection risk, which is in the hands of the auditor. Detection risk alone we can control and influence, but control risk we can't. Inherent risk and all we can't control. It is out of our control. It is company's risk, inherent risk. So inherent risks and control risks are influenced by client. These are entities risk, not influenced by auditor. So what is an inherent risk? Inherent risk is susceptibility of an assertion about a class of transaction or account balance or disclosure to a material misstatement. Material misstatement that could be material either individually that mistake or aggregated with other mistakes before consideration of any related controls. Who has to, by the way, internal controls we discussed it, right? Briefly. Who has to implement these controls? Who has to design these controls? Obviously the business organization, the management has to design and implement. How they design and implement the controls? First to know, before implementing controls, they need to figure out how frauds and errors will happen. In how many ways frauds and errors might happen. You see, any supermarket, you will not find windows. Why? Windows are not specifically constructed because some customer, if at all windows were there, no, anybody can break the window glass and they can send the articles outside directly. Somebody will be there at the, the floor, yes or no, and some customer comes, enter into the premises and he throw the articles outside, and that's how a theft happens. That's why you see in stores and all, windows and all will not be there. That is one of the reasons. Second marketing reason, in some movies and all, they are showing why windows were not there, because they don't want you to know what is happening outside so that you forget your time and do involve in shopping. That's a business strategy. It's both. One is to prevent a fraud, two, to increase the business much more. Again, there are many reasons, but that is one of the reasons. You see, so first, the supermarket, before they implement all the rules and regulations, policies, procedures, controls, getting it, they first try to identify where and all frauds happen, how many ways the frauds can happen. All the jewelry shop, you see, exactly top of the counter you will find CCTV cameras. Suppose if at all it's a some 15 feet lengthy table, 15 feet of length table, you will find 5 cameras in a jewelry shop. On the single table is captured by 5 different cameras, because at every chair there is a camera. Because depends upon the severity of the risk, the severity of the controls also increases. And there will be some 5 to 6 people monitoring only CCTV cameras, monitoring only what is happening here. Getting it? So inherent risk is the possibility that from auditor's point of view, how a class of transaction, how an account balance, how a disclosure may lead to material misstatement. What is the possibility of financial statements leading to material misstatement before controls are implemented, before taking into internal controls? That is called inherent risk, and that is called risk assessment. First, we should do inherent risk assessment when we are doing audit. I told, right, identifying and assessing risk of MMS, SA 315 heading. What is SA 315 heading? Identifying and assessing risk of material misstatement through understanding the entity and its environment. So I need to do a risk assessment, right? What risk I should what inherent risks are there? What risks possible? First of all, in a go down, in a warehouse, what are all the risks that are possible? Okay, risks are so many. To avoid these risks, to overcome these risks, what controls company implemented, that I will check the second step. So inherent risk is the risk without considering internal controls. If at all control is not there, how many ways mistakes can happen? First try to identify how many ways. Okay, 10 different ways mistakes can happen. In order to prevent these 10 types of frauds, what policies company implemented, what controls company implemented, that controls I need to check. And in that controls, is there any possibility that any of the control, any of the policy may fail? That is control risk. Getting it? So inherent risk is a risk. Susceptibility, there's a possibility that an assertion about a class of transaction, it may be money, it may be number of units, it may be value, sorry, it may be about the transaction itself, getting it, or account balance, it's susceptibility, possibility of an assertion to a misstatement before considering related controls. Before you take into account any controls, how many ways mistakes can happen? Try to do that assessment. Try to do that risk assessment. Remember, these are the risks, something which is not created by you, but you are identifying it. Remember, there is always a risk. There is always a risk before taking any internal control into account of a particular transaction or a particular account balance or particular disclosure related requirement, getting it. And there is always a chance that there will be misstated, and such misstatement can be material, and this risk is called as inherent risk. Before taking any internal control into account, what are the possible ways of frauds? What are the possible ways of errors? Try to do that assessment. Once you identify so many possibilities of material misstatements into the financial statements, then you see what controls company implemented. See the controls, what they implemented, and see whether the controls are functioning properly. Then you will identify control risk. Inherent risk is higher for some assertions, obviously, for some related class of transactions and balances than for others. Obviously, inherent risk may be high for, let's assume, debtors, or maybe for wages. Inherent risk may be low for inventory. So in our example, which we discussed at the beginning of the session, when I visited go down with respect to inventory, whether as per the records inventory is existing, the risk is very low. But when I went to wages, how much ever actually paid to daily wage laborers, how much the company has to pay, how much they are paying, and how much they are accounting, there is a high assertion risk here. Yes or no? Here, occurrence of employee benefit expenditure, occurrence related assertion is very high. Whereas existence related assertion for inventory, the risk is very low. Getting it? Now, for example, it may be higher for complex calculations. Same way, external circumstances giving rise to business risk may also influence inherent risk. For example, companies facing a severe pressure from competitors, severe pressure from the industry, severe pressure from the holding company, that this company is not doing well, that the company sales are not generating proper. Because of this pressure, what happens, top management, directors of the company may try to manipulate sales, may try to inflate the sales, may try to book fictitious sales. Pressure. This is one external circumstance. For example, technological development might make your product obsolete. Factors in the entity and environment may also influence the risk related to a specific assertion. Factors in the entity, for example, in the go down, whether CCTV cameras are there, whether storekeepers are there, security systems are there, proper checking is there, perpetual inventory system is there. These are also important. These are also items will affect inherent risk. So inherent risks are these inherent risk factors, all inherent risk possibilities are considered while designing controls, while performing further audit procedures. First, we look at what are all the possibilities of risk. Then we have to plan our further audit procedure. First identify the risk, then assess the risk, then respond. Getting it? So category of auditor's risk assessment, it may be lower risk or higher risk. We have to cover all the risks we should cover. So our audit procedure should address all the risks. Low risk items we should also verify, high risk items also we should verify. So auditor may assess some, after we do risk assessment, we may assess the risk, we may assess inherent risk of two different assertions as lower, while recognizing that one assertion has less inherent risk than other. Both of them have been treated as lower, or nothing but suppose inventory is there. In inventory, what are the points I'm concerned about? Existence. Another assertion what I'm considering is valuation. I need to do inventory related risk analysis, inherent risk analysis. Whether inventory, whatever inventory that is there in the books of accounts, is it there physically in the go down? This is the question. Yes, controls are very proper. As and when inventory is received, they are entering into the record, and then only they are sending it to the respective location. As and when there is a inventory to be sent out of the warehouse, first they are recording and then only they are sending. Getting it? Or first they are sending and immediately they are recording. Okay, since a perpetual inventory system is maintained, the possibility that whatever recorded inventory and physical inventory will match. Existence of inventory, the risk is low, I assessed. Fine. Valuation. Company is calling an expert. They are taking market data and they are taking realizable value figures, fair value figures, all that. They are doing scientific evaluation of value of the inventory and then comparing it with the cost, and then only they are valuing the inventory. The risk is low. In both the cases, for existence assertion of inventory, for valuation assertion of inventory, the auditor has assessed the risk as low. But within these two, in existence, no, when I feel low, probably I say 20. When in valuation, I feel low, but there my risk perception is 30. Even though for a single assertion, even though, like you see, the auditor may assess inherent risk of two different assertions as lower. For existence valuation, I felt low risk only, while recognizing that one assertion has less inherent risk than other assertion. When you ask me, sir, in which of these two, okay, both are low, existence risk is low, valuation risk is low, but among these two, where you felt extremely low, valuation is so safe. Existence, I still have some doubts. It's okay, low risk only, controls, everything is proper. So getting it for two different assertions, even though I say risk assessment as low, but for one of these, I may have higher appetite. One of it, I may be feeling little bit higher compared to the other. Between these two, one is higher, one is lower. But as a whole, from audit point of view, both are lower. You know, we need to categorize the risk into high risk or low risk, sometimes medium risk. You know, what is this categorization? This is called risk assessment. Why we need to categorize? If at all it is a high risk, no, we do test various details, we do apply analytical procedures, all that. If the risk is low, no, we just only do analytical procedure and then leave it. Getting it? If the risk is medium, no, I will do mild test of details. Getting it? And I will do substantive analytical procedure. Able to understand. So risk assessment, assessing the risk is very important so that you can plan in your audit. Suppose in inventory, I felt so many risks, high risk I predicted. In such a case, what I will do? In my audit plan, I will allocate senior article and audit managers. I have spent 2 days, do entire proper physical verification, everything, all that you go and do. Suppose if I predict low risk, I will not do this. I will simply tell my team member just to go for 2 hours, verify all the records, everything, document it and come back. This is my response to the risk. If I have to respond properly, first I need to do a risk assessment, right? And remember, it is important to consider reason for each risk, even if the risk is lower. So when auditor is designing test of controls, you know, when the risk is lower, no, you need to have sufficient appropriate audit evidence that the risk is lower. You need to document how the risk is lower. So reason is very important, even if the risk is low. For example, an accounting standard provides guidance on some complex issues. For example, there is a standard property, plant and equipment, present value of estimate of decommissioning and site restoration. There is something called decommissioning and site restoration expenditure. That value you need to estimate, that you need to bring it to present value, and how this issue, how you need to create a provision for that, how you need to add that in the PPE cost so that you can claim depreciation on that as well. Accounting standard gives a guidance which might not be understood by management. Management did not understand this decommissioning, all that. Therefore, recording of this issue in the financial statements carries inherent risk. So management don't know this point at all. So there is a possibility that the property, plant and equipment capitalization cost is not proper. Accordingly, depreciation is not proper. That's a risk. There are large number of business failures in the industry. Suddenly in this industry, every company is failing. Therefore, assertions in financial statements of entity operating in that industry carry inherent risk. So if the business is continuously failing in this industry, there is a possibility that this business is also facing some severe crisis. So you see, recently IIT Bombay, some 40% of the students were not being recruited. 40% of the students, IIT Bombay, they are being unemployable, not unemployable, but they were unemployed. Campus selections and all, they were not being selected. So it is signifying high unemployment rate in the world that is happening right now. Getting it? Remember, in every sector, unemployment rate is there, but don't apply that unemployment rate to yourself. At the end of the day, depends upon person to person. Getting it? You make yourself very dynamic. You will become employable. Okay. Next, we'll finish control risk discussion, and then I will go back and sum up. So control risk. The next one is control risk. What is a control risk? Control risk is a risk. A material misstatement could occur in an assertion in a particular class of transaction account balance, which is material, will not be prevented, will not be detected, will not be corrected on a timely basis by the controls. If internal controls designed and implemented by the company is not preventing, is not detecting, is not correcting material misstatements which are occurring because of the control weakness, because of the control failure, that's called control risk. Auditors should test the controls. Auditors should test the controls to identify whether there is a control risk or not. What is this control risk? This is a risk that internal control system is not efficient to stop from happening or find and then rectify an appropriate time any material misstatements relating to financial statements, relating to a transaction, relating to a balance, relating to a disclosure, nothing but relating to financial statements. So relating to financial statements, misstatements are happening that internal controls are unable to stop. Therefore, it can be said that there exists an inverse relationship between control risk and efficiency of internal control. If the controls are highly efficient, control risk is low. If the controls are less efficient, control risk is high. This itself can be asked as an MCQ. Efficiency of controls and control risk. What is the relationship between them? Direct, inverse, no relation. They both are maybe none of the above. Inverse relationship. If the efficiency of internal controls, or we have controls are effectively superbly working, risk is low. Control risk is low, means control will properly work. It will not fail. If the controls are not efficiently working, risk is high. Able to understand? What are the examples of control risks? For example, they'll ask you a straight question. Define control risk. What are the examples of control risk? 4 marks question. They'll give you a question. Define inherent risk. What are the examples of inherent risk? Inherent risk means what? First point. Second point. Fourth point. And you need to write these examples. So if at all a straight question comes, what is inherent risk? Define, give an example. Then you need to write those 3 points and examples. This itself can be asked as a 4 marks question. And sometimes this can be asked as an MCQ. How? Which of the following statement is true? They'll give you this as an MCQ. Which of the following statement is not true or true? Auditor may assess inherent risk of 2 different assertions as lower, while recognizing one assertion has less inherent risk than the other. Among both, though auditor assessed as low, even though for both assertions risk is low as a whole, from audit point of view, response point of view, it's a low risk, I need not respond much. But though I assess it for 2 assertions low risk, between those 2, for one I may have higher feeling, for one may have lower feeling. But at the end of the day, both are less than low. Both are lower risk. Getting the point? Suppose you went to a showroom, you like, there are some 2 shirts which you saw, and both of them are not good. But if I ask you among these 2 which is good, you will tell right. Getting it? Same logic. Auditor felt for both 2 assertions, for existence assertion, valuation assertion of inventory, the risk is low. But within these 2, if I ask you among these 2 where it is high, can you figure out? Yes, that's what the sentence is. MCQs might come. Getting it? So examples of control risk, what are they? Suppose a company implemented a control. What? Cash and checkbooks should be kept in locker, and access is granted only to authorized personnel having the locker. Only authorized person. Bank manager is the only one having access to lockers where jewelry is kept of the customers. Getting it? When you go to locker, you will have one key, banker will have one key. That keys are in the custody of the bank manager. What is the risk here? What if the keys are in the custody of security guard? Security guard also can access the keys. There is a risk that control is not being followed. And an entity has devised a control that fire extinguishers and smoke detectors are in place and are in working condition at all times to reduce the risk of damage to inventories caused by fire. Okay, in the go down, whether fire extinguishers, fire controls, all that dynamic fire systems should be there. Getting it? Immediately when smoke is detected, immediately it should trigger the fire system should come into place. There is a risk that fire extinguishers are expired, not being refilled. Similarly, there is a possibility that smoke detectors are not working. This is a risk of control. What is because of this risk? This is actually a business risk. This is actually a business risk. DCP, BCP related risk, business continuity planning related risks. Suppose another risk. A company has implemented a control relating to petty cash. That items of expenditure of only less than 10,000 rupees should be routed through impressed system. There is a risk that system is not followed. If the petty cashier, if at all you give him 50,000 balance and tell him any expenditure less than 10,000 you should spend, why he will follow? Since there's 50,000, 20,000 payments also he'll make. Getting it? Suppose you give 10,000 rupees only to him and make sure all the control, whatever expenditure he's spending is less than 10,000. Obviously, since the balance with him is only 10, obviously he will spend less than 10. Control is effective. Getting it? These are all the various examples of control risks. Now again coming back. Now you see, why audit risk is there? Because there is a risk of MMS. There is a possibility that material misstatements might happen. Why mistakes might happen? It's inherent. In financial statement, there are so many risks are there, because of which transaction balances disclosures are prone to material misstatement. Okay, what company is doing? That's why they implemented control. What if control do not work? Then mistakes will happen. That's called risk of MMS. Okay, mistakes happen. Why there's an audit risk? I am not detecting it. We are unable to detect it. So audit risk is a function of inherent risk, control risk, and detection risk. Inherent risk and control risk is called as risk of MMS. These are entities risk. This is called as entities risk. So what is risk of material misstatement? Give 4 examples. They'll give you this question. This itself can be asked as a 4 marks question, which I will continue in the next video. I hope you are clear until now. Okay. Second question is also completed, technically speaking. We have to discuss third question. First question is also mostly over technically. So third question, fourth question. So in the next session, I will finish risk assessment topic. Complete risk assessment topic I'll finish in the next session itself. I hope you are clear until now. Remember, this introduction is very, very important to understand this chapter. Otherwise, as you go further, it will become very difficult. Though the chapter difficulty will increase as we go further. Okay, that's it.